Okay, I think we are going to go ahead and get started. And I just want to thank all of you for taking a little bit of time out of your day to be here. We're really excited about this fit for learning topic that we are going to be talking about today. And I really just want to jump right into things and get moving. So we're going to talk about some of the different questions that you should be asking a financial advisor. And I think that it's very common that people they're not sure exactly how to engage with a financial advisor. And so we wanted to be able to kind of help you to understand some of the roles of a financial advisor, but really equip you with some great questions that you can be asking your advisor as you start to go down that road and through that process. I want to quickly introduce the presenters that are here today. My name is Kyle Bingham. I'm the Managing Director for Financial Fitness for Life. Joining me is one of our financial fitness consultants, Christine Nakunin, and then we also have Matt Peterson and Pearson McAtee joining us as well. They are two of our wealth advisors, and so we're going to be able to share with you some insights today, and then hopefully help you to feel a lot more comfortable as you start some of those conversations. We're going to kick things off by talking about some questions centered around how you're going to investigate a relationship. How are you going to find out if a specific advisor is a good fit for you? We're going to talk about and ask some questions around how you will work together with them. We'll also talk about some legal details and some quick tips that can help you with that conversation as well. And then we will close things out by talking about some other questions that you can ask as you're exploring some of the different things that you might be able to achieve in conjunction with that advisor. And with that, we're going to kick it off with investigating a relationship. And I'm going to kick it over to Pearson here. And Pearson, with this first question, when does it make sense to use a financial advisor? And also go into a little bit of detail on whether or not they should be waiting for a specific event like retirement or inheritance or something like that.
Yeah, great question, Kyle. Typically people do wait for these massive milestones, getting married, birthing a child, inheritance, retirement, etc., before they reach out to a financial advisor. Why is that? It's because people typically experience financial stress or anxiety around those points. And it may sound redundant, but why would you wait until you experience, anxiety or some sort of stress before you seek assistance? So the good answer to that is it always makes sense to speak with a financial advisor. That way you can verbalize these pain points. So whether that's paying bills or thinking about a kid's college or just simply affording retirement, that way an advisor can tactically put together a plan that kind of helps you achieve your life's ambitions. And you get to talk about these things before outside events cause even more stress and anxiety.
Excellent. All right. Thanks, Pearson. Moving on to our second question. Christine, what's the first question that a person should typically ask a financial advisor?
Well, I'm going to actually flip that a little in terms of what question do you not want to get with your financial advisor when you first walk in the door? And the first thing you don't want an advisor that you're trying to find to ask you is, how much money do you have? If that's the question that you're being asked, you need to run the other way, because the financial advisor is there to help you, and they're there to really help you meet your goals. So any good financial advisor, their first question to you should be, what are your goals? And not how much money you have. And with that, I'd like to throw it over to Matt to ask him, why did you even become an advisor?
Thanks, Christine. And this is a great question because it really tells you a lot about who they are, why they do what they do, and what you're looking for here is something that's more meaningful. It's not, oh, well, my parents did it, or I just kind of want to show up. I like the markets, or I like numbers. You really want to find, there's no right or wrong answer necessarily, but what you do want to hear from them is that they're sincere. There's a deeper meaning. It's a helping hand. Maybe they really like the markets, and that is a good answer, but that they want to lift the stress off of somebody's shoulders. And so really when you ask, why is it that you're an advisor? What you should be listening for is if there's sincerity, if there's meaning, if there's passion in their voice when they're talking about why they do what they do. Because without that passion, then you're really kind of going to get somebody who's lackluster, doesn't really keep up that well, and will probably be lacking in some of the things that we'll dive into here throughout the rest of this webinar.
Excellent. Thank you, Matt, and thank you, Christine, as well, for talking a little bit more about what those interactions should be like and what should you be expecting. Now we're going to talk a little bit more about how you are going to be able to work together. And so, Pearson, let's go through this question here really quickly. Do I have enough money to be important to you? So how would you go about answering that?
Yeah, for us, that answer is unequivocally yes. Christine just mentioned that as an advisor, we're there to help you achieve your goals, just not make you another number on a spreadsheet. We don't provide advice just to clients who have assets to manage. It's to start that relationship and help people understand their current financial situations and help put some intentional plans in place so that they experience the least amount of financial stress throughout their lives. Those goals are going to continually change throughout, your life, and many times you won't notice them until an event happens. So don't worry about, a number that you're going to have to invest with this advisor before you have a conversation.
Great. And Christine, let's talk now about what else. You've kind of already talked about it a little bit, but what else should you expect during that first meeting, and what kind of information would be helpful to have at that meeting?
So as I said, it's when you're meeting that advisor, their first question should be, what are your goals? Because the advisor is there to help you meet your goals. And as Pearson said, it's not how much money you have, it's how are we going to help you get to where you need to be. So that first meeting is going to be a lot of just getting to know each other and making sure you're comfortable with each other. And you know what? You may find some advisors, and it's okay to interview advisors as well. Maybe that first meeting, you, for some reason, don't click with the advisor. That's okay. Maybe they have a great background, but if you're not feeling connected, that's one thing to think about. Another thing, maybe you and your spouse go to the advisor together. And for some reason, that advisor just looks at, in my case, my husband, and seems to kind of ignore me. I wouldn't connect, and I would be like, well, I need an advisor who's going to talk to both of us. Now, the advisor, to be able to really help you, does need a lot of information. And I've talked with people that had started conversations with advisors, and they were like, oh my gosh, they needed so much information. And the idea is, yes, they are going to need information about you. And this might not be your first meeting. It could be 2 or 3 down the road. But in order to come up with the type of plan you need, whether it's meeting a retirement goal or planning a child's wedding, they've got to really dig into your background. What kind of health insurance? What kind of life insurance? Do you have savings accounts? How much debt? I mean, you're going to be providing a lot of information. You can kind of think of it like the first time you go to see a doctor. That first doctor visit is going to take a lot of information, but after that, you start to gather and build that relationship. And one great example I had with somebody that I had referred to an advisor was this individual was planning for retirement, and their retirement dream was to own a motorhome. And so this advisor, rather than just saying, oh, you need a motorhome, let's just put X amount done. The advisor and the client worked together. Well, what kind of motorhome? I mean, they were looking at brochures and figuring out, well, what would that motorhome cost? And then they were talking about, well, where do you envision yourself going? I mean, I'm in Omaha, Nebraska. So are you just going to drive around the Midwest, or are you wanting to go out to California? And then figuring out, well, how much would the gas cost for that? So an advice to really help that individual meet their retirement needs and or their goals and what they wanted. And that's what a good advisor is going to do. They're going to help you dig in and figure out what needs to be done. And they can help you with paying off debt if that's your issue. They can help you with, do you need to be on a budget? So again, it goes back to advisors are not just for the wealthy. They really are for all of us.
Excellent.
And
Thank you.
then, yeah.
I was just going to add too, real quickly here, that I do want to highlight that idea of a connection. I think that is something that really is so important, because there is going to be a lot of interaction, and there's a lot that you're going to be able to discuss with that person. So that connection is very, very important. Matt, just real quickly here, how often are you communicating with a client, or maybe somebody that is starting this process of sitting down with you for the first time? Tell us a little bit about that.
So the cookie cutter answer here, unfortunately, is it depends, because there are some clients that I have where we touch base at least monthly, and then maybe quarterly we'll get together in person to go over how things have done and where they're at in relation to their goals. There are other people that I work with that say, I trust you. We've gone over the plan. We've put the plan in place. I can check it on my end. I only want you to call me or talk to me if something's going wrong. I don't just call them when things are going wrong. That's not a good thing for an advisor to do. It's just call you when the house is on fire. But it really kind of depends on how often you want to hear. Because if you sit there and talk too much, it's really easy to get caught up in the noise as to what's going on in the market and the economy and the world. And there's always something that's not real. It's not just rainbows and smiles and butterflies that's floating around out there. And so when you talk too often, you kind of get caught up in the weeds and lose sight of the big picture. And so ideally, you'll want to hear from them at least once or twice a year. If they're not talking to you that often, then you start to wonder if they've forgotten about you, and that's not okay. But you should have a very open line of communication with them. If you're sending them emails, if you're calling them, they should get back to you in a timely manner. And you should have periodic reviews, however often it sounds good to you, to go over where you are in relation to your goals and what's going on, what changes have been implemented, and how those are going to impact you going forward.
Excellent. Yeah, thank you, Matt. That was really helpful. And so I hope that this section helps understand a little bit more about what that working relationship is going to look like. Another really important area that we're going to talk about here for a couple moments is around some of these different legal details. And so, Christine, can you answer the question, what is a fiduciary, and will you be a fiduciary to me if I decide to work with you?
Okay, that is an odd word, I know, but it's an odd word that really has big advantages to you as our client. The definition is a person who you've entrusted with some type of power, typically like financial control, and they're working for the benefit of you. Now, one thing I'd like to say is not everyone that says they're a financial advisor has first a training, and not everyone that's a financial advisor is a fiduciary advisor. And I really, in my opinion, you want to be finding a fiduciary advisor. And I know this sounds like, shouldn't this be the way it is? But a fiduciary advisor is obligated to make recommendations that are in your best interest. Now, that might seem mud, like, wouldn't my advisor always be making recommendations in my best interest? No, they would not, because some advisors may be more focused. Maybe they say, oh, we don't have any fees. Well, that's not true. Their fees are probably tied into commissions that are tied through maybe the investment products they're selling you. And so in that case, how do you know that advisor is making a decision in your best interest, or are they making that decision because they're going to make more on this product? So making sure that your advisor is a fiduciary advisor means that they're going to work in your best interest. In addition, there might be times you might have an advisor that's a fiduciary advisor, but maybe you need some life insurance, and that advisor could sell you some life insurance, which they'd get commission. And just make sure that they're disclosing that to you. There's nothing wrong with commissions, but make sure that the decisions are being made in your best interest, not in the advisor's best interest.
Excellent. Thank you for that. Kind of going along those same lines a little bit, we get into discussions about credentials and things like that. So Matt, what are your credentials for an example, and what's your specialty? How can an individual learn more about the specialty of an advisor that would make sense for them to work with?
Absolutely. And so there are a couple different types of licenses out there that you'll likely run into amongst advisors. The Series 7 is one that's becoming less popular. It's more how business was conducted. Go back the last 25 years and kind of mutual funds and the front end commissions that, as to Christine's point, weren't always in the best interest of the people, and there were problems with that. So that's one that's available out there. There's Series 63, 65, 66, all kind of achieve the same thing. Those are your registered investment advisors who have to be a fiduciary and are held to the highest duty of law in order to deliver recommendations to you that are what are in your best interest. And there's all sorts of supporting rationale behind why they believe it's in your best interest. Now, as far as specialties go, different people have different needs, and there are advisors that focus on those different, I guess, niches within the broad spectrum of the world. And so if your focus is to really build a financial plan that incorporates your estate planning, your tax strategy, your retirement income, your investment strategy, all these different pieces, you probably want to work with a certified financial planner. And somebody who has that designation would probably better align with your goals. Now, there are designations that pertain to alternative investments. There are designations that pertain to high net worth individuals, all sorts of different designations. But the thing that you're looking for when you are asking about somebody's credentials is really to see that they're continuing to learn, they're continuing to evolve to be able to best suit their clients' needs, best meet those. And so a specialty, asking someone about this, if they don't necessarily specialize in working with you particularly, your specific situation, it shouldn't necessarily be something that turns you away from them. But you might ask the questions, okay, well, I understand I'm not your specialty. How do you believe that you can cater to me to help me achieve my goals? And so it just kind of helps start a question or a dialogue to really hone in on if they're a good fit for you.
Great, thank you, Matt. And Pearson, I want to turn it over to you for a moment to talk a little bit about fees. And I know there's a number of layers to this, but what would be just some quick tips that you might have? Maybe talk a little bit too about how fees are disclosed so that those that are listening in can be aware of how they get to those answers around fees and things of that nature.
Yeah, much like Christine and Matt just mentioned, the way the financial advisor should be licensed and should be paid going forward is 100% as a fiduciary. And that kind of feeds into the next question, right, of what's the difference between asset-based and commission-based. And when you are a fiduciary, you have to do whatever's in the client's best interest. And that's the way that it will be in this industry and should be. And so another way of having that asset-based fee different than a commission or product-based fee. It just means that if you were a commission advisor, you would get paid, like Christine mentioned, on the specific investment, and you are incentivized in order to sell that certain product, whereas a fiduciary has no other incentive other than doing what's in the client's best interest. And so typically when you ask what is your fee, it's a percentage-based fee. That is what the asset-based fee is. So if they say anywhere from 1 to 1.5%, somewhere in that range, that is the yearly fee. That would be an asset-based fee, and that would be in a reasonable range for someone to have a fee. There's also some advisors out there that simply just put together financial plans for a flat fee. And that is totally fine, okay, as long as it is reasonable. So really the moral of the story is find that fiduciary. They are going to do what is in your best interest. And then from there, the different fees that come out of it will hopefully be a asset-based or just percentage fee or a flat fee from the financial plan.
Great.
Something to add here real quick, Kyle,
yeah, sure.
is really with the asset-based fee, they've got skin in the game. And so they want the same thing you do. If it goes down, they're upset. And so they're going to fight, they're going to work harder, in theory, to make sure that you're achieving your goals. So you're just in it together, and there's something to be said about that alignment of interest there. And so I just thought that was a little important note to throw on top of Pearson's already good comment.
Yeah, I think that is a great point as well. So what I want to do now is kind of turn our focus a little bit more to what I think are some more real world examples. And I want to give each of you an opportunity to spend a few moments here talking about the different things that you might be exploring with a client and how you help that person to achieve. So Matt, why don't you kick it off with talking about how you would answer questions like, what do I need to know about the market or other current events or economic conditions? And maybe the question also that says, what would happen if the market goes down? Am I going to be really taken off course? How would you go about helping a client through these situations and answering these questions?
I like to talk to the people that I work with about, there's so many people who see the news, the headlines, what's the S&P doing, what's this doing, what are interest rates? And so what I like to share with the client is, okay, whenever you see this, this one indices or this one thing, that's what you're going to be most tied to. So if that's up in a day, you're going to be happy. If it's down in a day, not so happy. But it's really to let them know what impacts them, what stands to potentially, as I'll get to in just a second, derail them. And current events, I mean, the news organizations are paid based on how many eyeballs are glued to it. And so sometimes you get some sensationalization in the news, fear sells. And so kind of a doom and gloom approach is what attracts more viewership. So kind of making sure that you're looking beyond the veil to understand really what's going on. Throughout the history of our country and the world, we've gone through a lot of different things that certainly spelled doom and gloom for the rest of humanity. And here we are today as the largest economy in the world. And despite all that's going on with interest rates, we're still clipping along at a pretty good pace, certainly relative to the rest of the world. So as far as what would have to happen to markets to really take you off course, that's going to be investor specific, family specific. So there are some folks where they put themselves in a position where they really can't be knocked off course. They've done a great job saving. They have a conservative personal financial outlook, and so they don't spend outside of their means, and they're conservative by nature in terms of their spending and savings habits. And so that builds resiliency, whereas there are other people that have put off savings. Maybe they spend a little more than they should. They could use some help with maintaining a budget. Well, their financial situation is more precarious, and so they're more reliant on things to go right over time to avoid being knocked off course. Things like last year derailed people because it was very volatile, and there really wasn't a lot of place to hide to protect that. And so what you should know is talk to the advisor or the person you're thinking about working with. Say, okay, here's the plan that you're recommending for me. What stands to knock this off course? And how can we mitigate that risk if we can?
Great. Those are some good tips for sure, Matt. Now, Pearson, I think that we can all agree that when somebody is looking to work with a financial advisor, they're trying to simplify certain aspects of their financial situation. So when you're first sitting down with someone, what are those first couple steps that you would typically take to help them to start that process of just simplifying everything going on in their financial lives?
Yeah, I know it's going to sound redundant, but I want to make sure everyone has this takeaway that the first step is always reaching out and finding a fiduciary advisor that you trust and feel comfortable with talking with. Without that trust and transparency, it's not going to feel like it's simplifying your financial world or consolidating in any manner. A lot of people, WebMD is really nice, but when you have an issue with something with you going on medical wise, you seek out a professional. It's the same thing in this. When you seek out an advisor, they're around this, they're going through the markets, the current events like Matt just alluded to be able to help educate you about those. So when you find someone that you can have trust and transparency with, they will help bring that situation together because they do that time and time again. So that advisor is going to, help you implement a financial plan that really takes a total picture of your net worth, not just the invested assets in a 401k or in a brokerage account outside of there. They're going to really help you understand what those goals are. Is that retiring early? all those different things. And so once they put this financial picture together, it's going to be very clear and concise of where you have certain accounts, what you have for future investments, for short-term investments, and really help you potentially even consolidate different accounts. So say you've worked at a bunch of different jobs, and you have IRAs or 401ks out at a bunch of different spots, and you don't remember how much is here and how much is there. That advisor is going to walk you through and help call these institutions and bring those all together, or at least find out where they're at, how they're invested, and really help you take action and feel better and feel like that weight's really off your shoulders. So that's the best way to help simplify and consolidate, is find someone, find a professional, a fiduciary professional, to be able to help go through this.
Excellent, excellent. And Christine, just to close things out here, we hear a lot about money management, saving for retirement. What are some other solutions that you might recommend that listeners tuning in today might want to prioritize? Like, what might be a second or third thing, or even first thing that you might want to do?
So obviously retirement is a big piece. And for most of individuals, their retirement plan through their company might be the only place that they're getting some financial help. But then after you kind of got the basics down, then you may want to look at, would you like to be able to send a child to college, and do you need somebody to help you look at that? Do you have enough life insurance to meet the needs of those that you love? So there are a lot of other pieces to an overall and plan and working with a financial advisor. So one thing, if you're thinking, well, I just don't have enough money for this, I'm not going to be important, we're here to help people. And in fact, I heard yesterday, all of us on the call were at a conference, and the individual referred to financial advisors as really your financial therapist, which is true, because you want to develop that relationship. They're the ones that are going to help you, particularly when we go into those scary years like last year when the market's down and you need somebody to talk you out of pulling money. The financial advisor really can be a financial therapist for you. And what statistics have shown is, survey that was done, let me get the name of the survey correct, the National Financial Literacy Council surveyed individuals about working with their financial advisor. And what they found was 84% of the people felt so much more comfortable and more secure in their financial situation. Now, did they make hundreds of thousands of dollars? No, but it's a matter of providing you comfort and having somebody to help you. Again, if I go back to my example of a doctor, we're not all going to treat ourselves, and you're not going to go on to, well, maybe you are in WebMD and get the solutions. You really want to talk to somebody. The same with your finances, and reaching out and having somebody a trusted individual that you can talk to about and help you meet your financial goals.
Excellent, excellent. Well, Kirsten, Matt, Christine, I appreciate all of you jumping on here for a few moments to kind of help people as they start to navigate through the idea of potentially working with an advisor. And I'm sure in some cases, some of you already have some follow-up questions. And so I think one of the easiest next steps that you can take is take an opportunity to sit down with one of our Financial Fitness for Life consultants. If you scan that QR code right there, you can find a date and time that works for you, and we'll be more than happy to just sit down and help you to navigate through all of these things. I'm also going to send a link out underneath the chat section of the GoToWebinar console. So I just sent that out there too. You can click on that, and that can be another easy way for you to find a date and time that works for you. Other than that, as most of you know, I know we have frequent listeners here that continue to turn in, but our Fit for Learning webinar series is something that we do every month, and we want to keep these relevant and pertaining to a lot of the questions and maybe concerns that you have. So for next month, we're going to be going through understanding the different terminologies and options for investing for retirement. So once again, you can scan that QR code and get registered for that webinar if you haven't done so already. And in closing, only other point that I'll make is that just keep an eye out for an email from us. You're going to be able to get a link to today's recording, so you're welcome to go back in and review that, or if there's somebody else that you feel might be important to share that with, you're welcome to do so as well. And with that, I just want to thank you all for tuning in today. Appreciate your time. I hope that you found this helpful. We're here to help in any way that we can, and just want to say thank you, and we'll look forward to seeing you again in the future. Bye-bye.